Good evening and welcome to the Marsh webinar, the new risk order on cyber resilience. Good evening, everyone. Thank you for joining us today evening. Welcome to the Marsh webinar on cyber resilience, the new risk order. We'll be starting off in the next 3 to 4 minutes. Good evening, everyone. My name is Anoop. Welcome to the Marsh webinar on cyber resilience, the new risk order. It's 3:59. We'll be starting off in the next 1 or 2 minutes. I can already see close to 45 participants. Many more are joining by the seconds. Hi, good evening. My name is Anoop. Welcome to the Marsh webinar on cyber resilience, the new risk order. It's 4 p.m. We have a star-studded panel today on cyber risks. And I'm sure you're going to have a lot of fun, and it's going to be a very enriching conversation today. So a very warm welcome to all of you. A couple of housekeeping items from us. Ritesh, yeah. A couple of housekeeping items from us. If you have any questions, you can type those questions in the Q&A tab at the bottom of the panel anytime during the event. And if you'd like to speak, you can raise your hand as well. There's a mechanism for doing that. We'll try to unmute your line and have you go live and invite. We'll also be asking you a few questions as we go around and do some dipstick as to how you're doing and what you feel about certain risk issues. So we would encourage that please do participate on this virtual connect that we have created today. This event that we're doing today is a part of a series that we're doing, and we are calling them Excellence in Insurance and Risk Management. And we're trying to showcase the best of Marsh, the best of our talent pool, the best of our knowledge partners. There are two upcoming sessions apart from what we are doing today. One is on parametric solutions, and we have our global expert, Benchi, who's the Asia Pac leader for us, as well as Paul Wilkins, who's the risk management leader for us in Asia. And there's another one on November 6th on risk finance optimization, especially for finance professionals and for senior finance leaders, risk managers who have to take insurance purchase decisions. How to optimize, what's the right premium, what is it that you can retain on your books, and what is it that you can transfer efficiently on the books of the insurance companies. It's going to be led by John Davies, who's a global head of analytics. I'm sure you'll find that also of interest. So let me ask you, how are you feeling today? Wonderful. 80% plus people are calm. Wait till you hear about cyber risks. And we'll probably do this poll later on as well. So we have, like I said, we have a star-studded panel of experts today. We have Tom Regan, who's joining us from New York. It's very early in New York, so really appreciate Tom for joining us today. Tom is the cyber practice leader for us in the New York office. He oversees client advisory and placement services for us for the cyber risks throughout USA. And he also serves as a senior cyber advisor for some of the world's largest clients that Marsh has. Tom started off as a technology specialist, as a security specialist in his career. He's also been a part of AIG. He's also been a part of Beasley as well. We have Magda joining us from Singapore. Thank you, really, Magda. Thank you for joining us today. Magda is the head of our cyber risk consulting practice in Asia. She is a PhD in telecommunication engineering. She is a certified information security and systems and security professional, CISP, and a certified insurance security officer as well. She's had multiple CIO, CISO roles as well. And incidentally, she's also a serial entrepreneur as well as the top 50 international cybersecurity influencers on Twitter. Many of you know Bhishma. He's the head of our cyber media and technology practice. He interacts with some of our largest and the creme de la creme of India Inc. on cyber risks. Some of you know me. My name is Anup. I have the privilege of leading financial lines, professional lines, as well as private equity and M&A business in India at Marsh. So with that, I would like to invite Tom. Over to you, Tom. Tom, you're on mute.
I was double muted. Perfect. Security's tight. Well, thank you very much, Anup, and thanks very much for having me here today. I wanted to start with another question, just to get a little feedback from the group about why everybody thinks organizations are purchasing cyber insurance. Everywhere I go and when I talk to clients, we always get some interesting thoughts about why they buy cyber insurance. I think that'll help frame up the discussion today. We're going to talk a little bit about cyber risk issues, but also talk a little bit about then cyber insurance. So why are people buying it? Precautionary measure, overwhelming, that's great. Interesting, no client requirements. I will tell you that in a lot of locations, client requirements are a pretty common reason for having to buy cyber insurance. But interesting. So let's hop into it. So obviously, there's a lot of conversation about cyber risk, and it's in the news all the time. And in some ways, it can be a little bit overwhelming. I think sometimes it's exhausting trying to keep up with all the things that are called cyber attacks, cyber events, basically every day. This is a selection of events from the US just because I already happen to have this slide, but I'm sure I could do the same one anywhere else in the world. Cyber events are happening on an almost daily basis. And you would think that somehow COVID had pushed cyber to the side. But we did a study, as you see on the next slide, with the World Economic Forum back in the middle of the pandemic. And when we asked global leaders what they thought about the impact of COVID-19, the number 3 risk issue was cyber events. And so that's an important theme. And the reason why is because I think cyber is one of those things that can be difficult to pin down, right? Arthur C. Clarke said that any sufficiently advanced technology is indistinguishable from magic. And so sometimes with cyber events, it can feel very ephemeral and it's hard to understand if it's real. But the reality is that there is enough going on that cyber continues to be this overwhelming issue at the top of the risk priority, even when there's other things going on. So that's perfect. We can go ahead, Ritesh. I want to tee up. So we do a study called Regional Risks for Doing Business. And this is, again, in partnership with the World Economic Forum. And we go out and we ask 12,000 business leaders around the globe to talk about what their top risk issues are, right? And you get some interesting results. If you look at this year's results, and this just came out last month, across the globe, cyber events are the number 4 risk issue, right? So if you slide forward one more, you see that cyber attack is the number 4 risk issue, and that data theft, which I would say is another type of cyber attack, is number 9. And so even in this world of pandemic, globally, cyber remains one of the 5 top risks facing business leaders. Now, this is even more incredible when you look on the next slide at what's happening where I am, which is in North America, where in 2020, cyber attacks are the number 1 risk. Cyber attack is ahead of COVID in terms of business leader anxiety. This COVID thing is terrible, but in the US and Canada, people are starting to feel like, okay, we've got our hands on it a little bit, but the big threat is cyber attacks. And that's because, in the US and Canada, we are getting absolutely destroyed on a daily basis by ransomware events. You guys may not have seen this, but these ransomware events where hackers break in, lock up your computer, and then want you to pay a ransom to either release the systems or release your data are happening almost every day. In fact, there's now a very targeted attack on US healthcare institutions to try to disrupt organizations that are dealing with what is our 2nd or 3rd wave of COVID attacks. And one day last week, I believe 6 different hospital chains were hit by crippling ransomware in the same day. So the prevalence of cyber attacks is really extraordinary. It's very powerful. And I think also it's because for the attackers, it's very lucrative. So you see that cyber attack is just this overwhelming issue. Now, if we look at the data to see what's going on in India, and go forward one more slide, you see that misuse of technology is actually number 2. And that's not surprising, right? The point is that as the world becomes more connected and more reliant on technology, technology issues are rising to the top. And so this is a global trend. If you go forward just one more slide, you'll see the comparison between in the more advanced economies compared to the more developing economies, the reliance on technology is absolutely driving that threat of cyber attack. So the point is that this is a problem that is only going to get worse. As technology drives more into global economies, we realize that cyber attacks are going to go up and up and up and up, because that's all coming on the back of these really strong cyber technology trends. And that makes sense, because if you look at the cost of cyber events, right? As recently as 3 years ago, we were talking about a $1.5 to $2 trillion problem. Now we're talking about an $8 to $10 trillion problem a year. The amount of money that the global economy is losing to cyber events is extraordinary. And so the point is that, I think when you look from an insurance perspective, sometimes it can be a little challenging to think about, why are we spending so much time on this cyber policy, which usually is smaller limits, lower premium compared to all the other insurances an organization buys. But from a risk perspective, risk is far and away, there's no doubt that cyber is one of the most dynamic and threatening issues that organizations are going to deal with. And so this is a quote from a couple years ago from the chairman of Maersk. Maersk is, as you guys probably know, one of the world's foremost global shippers. And they were hit with a very crippling ransomware attack. You can read all about it in Wired magazine back in the summer of 2017. And I think one of the things that's important is that Maersk, like so many other organizations that got caught up in that last wave of cyber attacks, realized cybersecurity is not a bolt-on anymore. Cyber risk is not an optional issue. This is a core issue that every firm is going to have to come to grips with in order to stay competitive. So this quote, this is a wake-up call to become not just good, but to have a plan to come to a situation where their ability to manage cybersecurity is a competitive advantage. This is from the chairman of Maersk. And so I think that's kind of the context for what we're talking about today, which is that organizations have to not only recognize this, but they have to embrace it, and they have to do that in order to drive competitive advantage. So what are we seeing, right? Ransomware attacks are by far the #1 issue we're facing right now. So just a couple stats, because they are dizzying. Okay. The average outage for a ransomware event as of the second quarter of this year is 16 days, 2 weeks. So organizations, big ones, small ones, well-prepared, unprepared, on average, 2 weeks. The average ransomware demand is $178,000. I will tell you that we are regularly seeing ransoms of more than $1 million and oftentimes more than $10 million in very, very short order. And ransomware attacks have increased 72% since March. 72%. They were already growing. Now, why is this? In one part, it's because I think that obviously there's a lot of anxiety and a lot of disruption, and that creates a lot of opportunity for attackers. I think the other issue is that when organizations had to go remote, different organizations were in different levels of preparedness before they had to make the move to go to remote work. However, when they made the move, the #1 priority was business resilience. Get the systems up, get people working, we have to save the company. The price of that is that things move quickly, and then I think there's a perception that as a result, organizations may or may not be more secure. And so, I'm sorry, maybe less secure. And I think that's probably a fair assumption. I don't know that that's the case everywhere. In fact, lots of organizations have done a great job making the transition and doing it securely, but it's certainly encouraged attackers to push very, very hard to launch, an incredible number of attacks. And so we're just seeing this incredible wave of ransomware. Now, if you look at what we're seeing, okay, there's 4 main trends. Because you are seeing cyber business going everywhere, because there is so much more technological sophistication, because there are so many more devices. Our sister company, Oliver Wyman, estimates there will be more than 4 trillion Internet of Things devices within the next 10 years. It's an unfathomable number. But the result is that with each one of those devices, you're bringing another tiny little bit of risk. We're expecting 4 key trends. One is new vectors of attack. We're clearly seeing that. The attackers are finding new ways to get in. 2, the level of regulatory scrutiny. This is one thing that is true across the globe, is that we are seeing an incredible amount of activity from regulators attempting to get their hands around this problem and figure out what organizations should do. The third is third-party risk. Organizations are becoming far more connected. You see data moving in and out of an organization 5 or 6 times in a single email. And so the result is there's a much greater connectivity and a much greater exposure to risk. And then of course, remote work from home widens the attack surface. So the net result of all that is that organizations are trying to do more and spend more. And so if you slide forward, you see this is spending on cybersecurity. This is organizations trying to prevent cyber attacks. And what you've seen is that over the past 7 or 8 years, you've seen a 70% increase in cybersecurity spending, $62 billion a year globally, which is amazing, except for the fact that you realize that over the next 7 years, we're going to see an even larger increase in cybersecurity spending, almost $100 billion, another 65%. Organizations are spending incredible amounts on cybersecurity. And notably, most of that money is spent outside the firm rather than in it, because organizations don't trust themselves to manage cybersecurity. They're looking to others for the solution. Unfortunately, all that spending isn't making anybody feel any better, right? If you look at a study we do with Microsoft on sentiment of business leaders around cyber risk, what you see is that over the past 2 years, confidence in the ability to manage cyber risk has decreased across the board. And in fact, more than half of Treasury professionals, those who are actually usually responsible for making the dollars and cents decisions about risk, say that cybersecurity is their toughest risk and will continue to be so. So when you talk about cybersecurity, you're talking about this growing problem where we've never spent more, but we've also never had more events, and we've never felt worse about it. So the point is that we have to do something different. We have to make a change in how we think about and approach the risk. Now, there's only 4 things we can do with the risk. We can avoid it, we can mitigate it, we can transfer it, and we can accept it. On the one hand, avoidance is for the most part pretty much out the window. That's not really a choice we're going to have in the modern environment. You can't say, take all the computers out, we'll go back to paper and pencil. So avoidance is pretty much gone. Acceptance, on the other hand, is important. We have to prepare, and we'll talk a little bit later. Magda's going to talk a lot about mitigation and some about acceptance. We have to prepare the organization for how much risk we're willing to take and how much we're willing to retain. But obviously, organizations are not going to just say, well, okay, Sarah, whatever happens, we'll accept. So all we have to do is focus on mitigation and transfer. And the reality is, when it talks about transfer is fantastic at reducing the impact of these severe losses. And transfer, AKA insurance, is an incredibly powerful way for organizations to protect their firms in a very capital efficient way. So I know that's a long build-up to a very short slide, but the point we're trying to make is that cyber insurance isn't just rounding out the insurance portfolio. It's one of the most important ways that organizations can deal with this incredibly important growing issue of cyber risk, where existing strategies around cyber security are insufficient. You need to have that balance of cyber risk transfer to help manage the economic impact of these really significant, really severe events. So let's talk a little bit about cyber insurance. One of the really interesting things about cyber insurance is how much is in it. Cyber insurance has both a first-party leg, the losses of the firm, the insurance policyholder itself, as well as a third-party leg, claims brought by others against the firm that the carrier intercedes and pays. Now, for first-party costs and expenses, we talk a lot about the cost of business interruption. So the economic damage suffered when a firm is out of business, and that can be either income loss, which is significant, or a lot of the cost is extra expense. One of the things that's interesting about cyber events is that you would think that the risk would be being out of business for 20 or 30 days. The reality is organizations have a lot they can do. They can bring in backup capacity. They can make people work extra shifts. They can do a lot to protect the firm. The challenge is all of that costs money, and that extra expense is insurable. Theft and extortion. So we can actually get you paid not only for the ransomware, the cost of the ransom from the bad guys, but also for the cost of getting it paid. The reality is most of the bad guys are not looking for you to write them a check out of your business account. They want you to give them Bitcoin. So there are specialist firms who are experts in securing the cryptocurrency that you need to pay these guys. And of course, the policies also include incident response, forensics, forensic accounting, notification, letters, as well as the cost of recovery for the firm, including things like credit monitoring. There's also an extensive third-party leg. So claims from affected consumers or businesses for their private information. One of the challenges, one of the trends we're really seeing here is a lot more B2B litigation. Consumers can have a difficult time proving their losses, but businesses who are downstream from you and are impacted when you lose their data have a much easier time, and usually a contract they can come after you with. So that breach of privacy loss, as well as an incredible amount of regulatory activity. On the regulatory activity side, you can get coverage not only for the cost of the investigation, but depending on the nature of the regulatory settlement, you may also be able to recover that from the policy as well, right? Because a lot of times regulators structure these settlements in ways such that they're not fines or penalties. They're just sort of an agreed maybe consumer redress fund. And as a result, you can actually get the insurance policy to pay for it. All of this is available in a single policy, which is really remarkable. These cyber policies are so broad and getting broader every day. It's just an incredible amount of coverage in a single policy. So another thing I think that's really important to understand about the value of cyber insurance is not the dollars and cents. If you think about the true emergencies we face in life, a fire, a car accident, a health issue, one thing that's really consistent is when something goes wrong, you need access to experts. Unfortunately, when it comes to cyber issues, it's not usually clear to firms who the experts are. And in fact, the people who you work with on a daily basis, who are really good at running the day-to-day cyber operations of a firm, are often, if they're doing their job right, not that experienced in dealing with catastrophes. So you need those cyber first responders after an event. One of the other major reasons why we buy cyber insurance and why Marsh is spending so much time focusing on claims and incident management so we can help our customers is because you need access to those experts. So the other critical benefit for firms large and small of using cyber insurance is the ability to get access to that network of service providers and then to use them before an event to help make the organization more secure. Approaching cybersecurity comprehensively across the firm, assessing cyber controls in a way that is economically motivated, and driving awareness and preparedness inside the firm as a whole. I think we covered a lot of the coverages before on the earlier slide. So maybe if we just go forward to the board slide. One of the things that's really important, and I think this sets us up very nicely for transition to Magda to talk about cyber risk management, is that boards of directors need to take the right overall approach, right? And so there's a couple things here, and this is based on our experience working with clients that help organizations build a real cyber resilience strategy. One is quantification of business interruption. And this is important because what we see very consistently is that when firms have talked about the consequences of a cyber event from a BI perspective, it's almost exclusively a couple conversations around a conference room table and maybe some back of the envelope math. And I just don't think that if you were dealing with what would be the impact of losing this factory, or what would be the impact of losing this office building, that organizations say, I don't know, 10 million bucks. I think that there's a level of rigor that people don't necessarily know is available that is important to driving those decisions. And that's important because you need to use those figures to figure out the organization's cyber risk tolerance. In my mind, I think the most important decision organizations can make about cyber risk tolerance is getting from 0 to 1. What's one of the first things we see as a mark of maturity is organizations to go beyond, we don't have any appetite for cyber risk, to recognize that cyber events are inevitable. We have to figure out what our appetite is. Then you can look at what's in the cyber insurance policy. Then you can look at how sufficient and aligned that coverage is with the actual exposures of the firm. And then you can think about response preparedness and regulatory tie-in. These are the kinds of questions that senior leaders and boards need to be thinking about when you think about how they manage cyber risk economically and tie it into a cyber insurance policy. In fact, if you look at, and this is a couple years old, James Clapper, who in the US was the director of national intelligence, said that the cyber threat cannot be eliminated. Rather, the cyber risk must be managed. And so what this means is that we have to accept as leaders that we cannot take and spend this risk to 0. We cannot eliminate cyber events. Instead, we have to figure out how our organizations can get on top of them, take a risk management approach, and then drive better results. And so that, I think, is the backbone of our overall strategy at Marsh, which is understand, measure, manage, help organizations understand their risk, put it in a context of their business, measure and manage it economically, and then find the balance in terms of risk management strategies between risk management, risk mitigation, and risk transfer. So I think that brings us into our third poll question. Which is, okay, so which is the most critical concern for you in light of the current situation? So while we wait for that, I'm going to queue it up for my colleague, Magda Chelly. Magda's going to walk us through some really thoughtful things around cyber quantification and how we can do the other stuff outside of insurance risk transfer.
Thank you very much, Tom. Hello, everyone. Good afternoon. I'm really pleased today to discuss a little bit further about cybersecurity and how we can understand the cyber insurance limits. But we will come back on that, especially with Anup later on with some questions. Now, before that, I can see that there is a major concern for you related to cyber frauds due to work from home, which is very interesting and definitely makes sense. And then the second one is business interruption. So let me start, first of all, setting up a little bit the scene here in Asia. Tom mentioned and described the situation in the US. However, there's no difference around the world. Cyber attacks are growing, and no matter how big, how small, or, really great your company is, you are a target. And it's completely independent on the size or the industry. Now, when you have that understanding and visibility, we need to be very clear about what does cybersecurity mean and how to understand cyber risk as well. We have a tendency in Asia in particular to believe that cyber security is mostly an IT problem. And I can see that particular aspect still very prevalent across different companies. This as well actually applies for smaller and medium companies, but as well sometimes for much bigger companies. So the first extremely important step before going into any other point around cyber risk is to understand that cyber is a business risk. And as Tom showed, it is considered one of the top risks for business stakeholders in the US, and this should be as well applied all over other regions of the world. Now, if we understand that, we need to ensure as well that we understand another point. And Ritesh, please, if you can go to the next slide. And the second point is 100% security does not exist. So we have seen that the expenses on cyber are actually increasing, and that still doesn't mean that the cyber attacks that are successful are decreasing. So you would think, What does it mean? Well, if we look at companies are going into a digital transformation, and especially with the current pandemic, they're even going into this digital transformation faster. Now, how do the cyber criminal act, or what do criminal decide to do as well? Well, they are going as well into a digital transformation. They are using technologies to attack companies and actually just run some cyber attacks because it is very lucrative. So now, if we understand that cybersecurity is about people, process, and technology, and 100% security doesn't exist, we come back on what Tom mentioned, and we understand that we need to address cyber risk in a cycle with mitigation, which helps us to address the risk and eventually reducing it, and with a transfer, because 100% security doesn't exist and there will be always a residual risk that something will happen. It's not if, it's when. And the transfer happens with cyber insurance. Now, of course, for certain risks and certain scenarios, we might be comfortable accepting that particular risk. But for others, we might just believe that is beyond our risk appetite. For example, if my business is down for 3 days, I will be still in business because I will be able to recover. If my business is down for 16 days, like Tom showed about the ransomware average time, then maybe your business will not be in business anymore, right? So this actually makes you think a little bit differently about cyber risk in general. If we go to the next slide, please, Ritesh. What I wanted here to give you as examples is basically scenarios where the cyber criminals did not exploit technology, which again, we think that is sometimes the only way of attacking companies. They exploited, in this particular example, people, and people presented a weakest link for this company in particular. Now, if we go to the next example, we see that in this particular example, cyber criminals exploited technology. And then if we go to the next one, we see that criminals exploited process. Now, again, if we go back onto understanding cybersecurity, we need to focus on having a mitigation process that address cyber risk with controls across people, technology, and process. We need to understand that cyber criminals know exactly what companies have in place, and therefore thinking that a firewall is a magical solution is not the right approach. They are aware about the traditional controls that companies have, but the companies are still a target and eventually might become victim of successful cyber attacks, or even worse, a ransomware attack, which is becoming very, very popular. Ritesh, can you please go to the next one? Thank you. So what is ransomware? We have this perception that, ransomware is some malicious software, but I realize that sometimes we forget what it really means. So ransomware, if we go back to the fundamentals, is a malicious software that will encrypt a victim's file or lock you out from accessing the files or the system of your company. Now, we have a way to actually get access back to those files by paying a ransom. And as Tom mentioned before, the ransoms are actually getting more and more important in terms of numbers. We're not talking anymore about $300 in Bitcoin. We are talking about millions of dollars of ransom. So now cyber criminals, they know that sometimes companies have certain controls that allow them to recover, and they might not pay the ransom. So what they are doing, they're trying to come up with new ways into enforcing the payment of the ransom for clients. So let's see, first of all, before going into the next evolution of ransomware, just a quick overview of how it can happen. And ask yourself this question: if today you are sure that as a company, there is absolutely no possibility for a ransomware attack to happen, lock all the companies' files and make the business actually not being able to function. Probably you don't have that assurance. Well, cyber criminals, again, know that. And what happens, even if they think that there is a probability for you as a business to recover, they are trying to find new ways. And if we look at the next slide, we actually find different kind of evolutions. But before going to that, companies across the world, again, have been victims to ransomware attacks. And one very wrong or myth is that believing that because you have an IT team or a security team, that you are protected against this kind of attacks. You can see in this slide that this is not the case, because there have been here a human mistake that led to an unupdated infrastructure, or what we call wrong patch management, and that led to successful ransomware attack. This is only one example, and I do not have, of course, enough details about this particular company, but it is a use case. Now, if you go to the next slide, please, Ritesh. As I mentioned to you, ransomware is evolving. And cyber criminals said, okay, we attack companies that perhaps don't have the perfect security controls. But what happens if we attack a company that actually has backups and is able to recover their operations without paying the ransom? They thought about it and they said, then we steal their data and we still ask for a ransom. So they found a way around it. So again, when we talk about cyber attacks, we are talking about criminals using technologies to perform attack. And they are aware about what companies usually have in place, and they try to find ways around. The next example shows as well a very big company that has extensive security teams, and they have still been a victim of a ransomware attack. So my point here, it's not if it will happen, it's when it will happen, because there's absolutely no possibility that you might never experience a cyber security incident. There's always a residual risk, no matter how advanced you are in your journey, no matter how big your IT, which is not the security team, is, and no matter which kind of controls you have in place. So as such, it is really important to have the right process to manage your cyber risk. And if we go to the next slide, one of the main points that I would like to highlight is that cyber risk is not just an IT control. Cyber risk defines a risk that relates to technology and that is linked and aligned with your business objectives. As for example, we have been talking about business interruption due to a cyber attack, or eventually data theft due to a cyber attack as well, or due to a successful phishing attack, for example. So when we are talking about cyber risk, it's really critical to link those risks to the business and forget about the technical concepts or the technical terms. It's more about what and how your business might be impacted when a cyber event occurs. Now, when we talk about how to manage cyber risk, and we have seen a lot of things around the controls in place, I will repeat one point. Cybersecurity is not about IT controls only. It's about a balance between people, process, and technology. But if you are unable to very clearly identify your cyber risk and understand your exposure, you are unable to measure and manage the cyber risks accordingly. And now what is very important or interesting for companies is, how do you measure cyber risk while knowing that cyber risk has been very often perceived as intangible? So if we go to the next slide, what is one of the very good value services that we provide with a Marsh is that we quantify a cyber risk, and we put very clear numbers to a cyber risk, giving you the possibility to understand if a cyber attack happens, that might cost me $5 million, and eventually 10 days of business interruption. Well, that might be possible. And if you don't have that visibility and therefore you don't have the right control. So if we go a little bit further and understand of how do we do that? Again, identification of cyber risk is very important and a critical step. So we start by ensuring that we understand the cyber events that might occur to your business, and you should do the same for your organization. Then, when we have that visibility understanding, we can build scenarios and we can prioritize them depending on the impact to the business and what you or your organization believe has a bigger priority. When we have the visibility of the scenarios, we can define or estimate the impact of that particular scenario. So what does estimation of impact mean? Let me bring it a little bit further and more practical to your business. If you have, let's say, your cyber risk is business interruption due to a ransomware attack, what happens when that particular event happens? Your business will be unable to perform. You might be unable as well to continue sell online if you're selling online, or even just to sell because all your systems will be out of function. Then eventually you might need to hire professionals to bring your system back, or you might need to hire professionals to negotiate with the cyber criminals. You might as well require additional employees or professionals to work for you over time. What about the communication with your clients, etc., etc.? There is a very important number of factors that will influence the cost associated to a cyber event. And that is how we estimate the impact of a cyber event as an example and of a scenario. Now, when you have that understanding and visibility, you are able to decide if you are fine if an event happens and you lose 10 million and you are out of business for 16 days, for example, or if you are not fine with that and you implement additional security controls to reduce that risk with controls across people, process, and technology. Now, even if you reduce that risk, as I mentioned, 100% security doesn't exist. So you will need as well to consider your residual risk. And the residual risk can be as well transferred to a cyber insurance. In this slide, I have put a wheel because cyber risk management is not a one-off exercise. You will never get rid of it because today we are dependent on technology. So don't expect that you will do an exercise once and then that's it for 10 years. That is not the case. You will need to continuously review your cyber risk, continuously enhance your controls, and eventually adapt as well your coverage and cyber insurance. Now, of course, you might want to terminate certain risk, but that is, as Tom mentioned, not really possible because we do not imagine going back to paper and pen, right? Now, when it comes to Marsh Cyber Advisory, we provide, of course, the support for all those areas that I mentioned. So do not hesitate to reach out for further information, but I'm really excited to have the opportunity to share with you further during our Q&A. So let's get to the questions and to the exciting discussions, Tom and Anu.
Thank you, Magda. Thank you so much, Tom. Very enriching. So let me ask you, this was all overwhelming. I'm sure that the poll results on how you're feeling will probably be different right now. But this was all pretty overwhelming for me. Let me ask you, Tom, what are the top three items, just three, that you perceive in the current situation which are important for clients?
Yeah, look, I think the top three right now is pretty straightforward. One is organizations need to be taking aggressive steps right away to deal with the common threat vectors that are driving these ransomware attacks. So that's external scans. I think things like remote desktop protocol. There are a lot of things that your cybersecurity team can tell you, but you need to be taking aggressive steps to prepare against ransomware because it's endemic right now. Second, and a very close second, is organizations need to be doing a much better job preparing to respond to cyber events. These things are not this is a likely possibility. Your organization is going to have to deal with an incident. And one of the things we see again and again, we've handled some of the largest cyber incidents in the world at Marsh over the past couple of years. And one of the clear differences between organizations that do well and organizations that struggle is preparedness. Because we know that all organizations are potentially vulnerable, but only some organizations are going to fall down in the response. And so practicing, having your network of vendors, having your resources in place, testing your plan is critically important. And then third would be obviously to buy cyber insurance, but to make sure you buy enough. Unfortunately, I think we see way too often that organizations have cyber insurance, but they don't have enough. And so as a result, after an event, they go through the tower very quickly. I mean, when you talk about these ransomware events, you can be talking about several $1 million, $10 million in the ransom alone getting paid within the first 24, 48, 72 hours. So the sums add up very quickly. And so we've seen very consistently over the past couple of years, organizations increasing the size of their tower because they recognize that they're far more exposed than they would have thought in the past.
Thank you, Tom. Magda, do you agree? What, in your opinion, is the top three areas for us?
Anup, I think in general, with the current pandemic and the fact that companies have accelerated their digital transformation, we are seeing a very big increase in risk related to the working from home environment. First of all, companies haven't been prepared for such a very fast switch to a different environment where there's not any more corporate boundaries. And therefore, the attack surface is not just the company network, it might be the employee's house, etc. So I see the first risk that is currently very important, especially in Asia, because I believe the level of maturity and preparedness for cyber events is lower here than other places in the world, is the risk of literally data theft due to, for example, successful phishing attacks with employees working from home. This is the first example. Then I perceive, of course, the problem that if you have employees working from home, you might have as well IT administrators working from home. And therefore, here we have a different kind of risk, which might lead eventually to a business interruption due to a compromise of a privileged account or an administrative account. And then your business might be completely exposed and especially unavailable as well. And then the third point or the third risk for me that I'm seeing as well is probably everything that relates to business interruption linked to ransomware. We in particular talked about that because it is becoming very popular. And the reason why it's very popular is as simple as the fact that it's very lucrative for cyber criminals. It just makes them make money. So they keep on doing it. And companies and individuals do not have a choice most of the time aside paying for the ransom to recover their data and make sure that they can actually very quickly come back into the business. Now, one important point as well here, let's take an example of an organization that is a victim of a ransomware attack and therefore all their factories in India, for example, have been disrupted and are unable to function. Now, even if you have the backup systems, how long it will take to recover? You might be obliged to actually pay for the ransom, which absolutely I do not recommend, but in some cases, that is what customers have done because instead of recovering the backup, paying the ransom was still less expensive. So there's several areas here, but again, if you go into the top three risks, they are related mainly to the fact that employees are working from home, and of course, the fact that cyber criminals are taking advantage of that, and they, of course, following the flow using technology as well.
Thank you, Magda. Bhishma, any different take from you?
No, I think Anup, it's well covered by both Tom and on Magda. The only thing which I would like to add here is that we know that the firms, the first reaction of any firm is to continue their business, and a lot of firms we know that they have invoked their business continuity plan because people were working from home. And in this quest, there have been certain relaxation on their policies as well, the cybersecurity policy. So while Magda and Tom have spoken about the direct impacts which these policies, relaxation of policies have caused, the one indirect impact I feel is also certain contractual obligations which these firms have taken while they were entered into in pre-COVID areas. So organizations have need to go back to their contractual obligations, need to check what they have signed it for, because we are seeing some of these not cyber claims but errors and omissions claims which have come out because of these issues. So that's the risk which I feel indirectly is affecting a lot of Indian services firm, I would like. Yes, everything is fine.
Okay, so you probably answered my next question, which is what is one of the big motivators. So you're saying contractual obligations is also one of the items that many firms are worried about.
Absolutely.
Good. And tell me something that Bhishma. So are insurance firms ready for this? How are insurance firms looking at this kind of mix of E&O and cyber related issues?
So cyber, as we all know, is something which is at a nascent stage in India. While it is almost 5 to 6 years, we are hearing about this policy, but it's only last 2 years where it has picked up pace in India. A lot of Indian insurers have come up with the product, while they have quick in coming up with the product, and I'm happy that the product is something which is customizable, which is up to the mark of international standards. We have good underwriters. The only thing which the insurers have not done their homework well is when there are claims and how to settle them. Just to give you an example, while we know that all the international policies, and Tom and Magda will second me on that will come up. These policies have an ecosystem built in the policy itself. You know that in India we do not have that ecosystem built in. So when it comes to choosing a partner immediately after an incident, right now our insurance policies are silent on that, and this is where I think there's a biggest issue which creates post a claim, where a client, because time is of essence here, client wants to appoint a forensics or a third party auditor immediately, whereas an insurer just puts an obligation that you have to take a consent, and this whole time goes into that, and this is where the whole issue is. So I think this is where insurers will have to work upon finding the right ecosystem within the policy itself, so as to ensure that the claims process is smooth.
I will say, to follow up on that, one of the questions we get asked a lot about cyber insurance is whether or not carriers are paying claims. Obviously, people have been concerned for years. I buy a policy, will it actually respond? And I can tell you that one of the happy circumstances around cyber insurance is that a lot of claims get paid, and they get paid very quickly. So when you think about, again, we're talking a lot about ransomware. That's a situation where organizations can be looking for millions of dollars in a matter of hours. And it's challenging for the carriers, but they've been very responsive. The number of times we've had to reach out to a carrier and say, hey, we need you to authorize $2.5 million by 4 o'clock in the afternoon, and they do it, is very high. So I think that the good news is that it's a complex situation, but carriers have done a very, very good job of making payments in this environment. Carriers want this product to work. Of course, there's always going to be challenges around any type of recovery, and all business interruption claims are complex negotiations, but the overall trend has been towards payment, and we've done a really good job, I think, getting some great recoveries for our clients.
That's super, Tom, because that's the real silver lining. It's a new product. There were some questions on the Q&A right now about, whether this is tested, whether insurers are paying claims. So thank you for answering that. Magda, $1 million question to you. You mentioned that you can do a math of, what the claims could be, how the downtime could be, and so on and so forth. But how do clients choose limits? What's the formula for that?
Well, I know it is actually, I feel it is $1 million question, because every time when I discuss with clients, this comes up again and again. Now, the problem is that traditionally companies have never quantified cyber risk. So if you define a cyber risk as, critical, high, low, and you give it some colors, that will not help you to define the cyber insurance limit. What is really critical is to understand after a cyber event how much money you might lose. Now, to understand that, it is important to build this scenario. And I am simplifying it by, saying, for example, business interruption due to a ransomware attack. But if you communicate with the different business stakeholders, you might understand if you are a victim of such a scenario, what would be the cost required to recover and continue your business again. And when you have that visibility, you're able to understand how much coverage you have. Now, of course, this is not simple, because if the company never done any calculation or quantitative analysis of cyber risk, it might be still an extensive exercise, but they can start. At least they, understand, for example, if they are unable to perform a business one day, how much that will cost. And as we, for example, have some information about, average of ransomware, they can do the math already. That's, again, very, very high level, but that's what means quantification, giving and putting a number to a cyber risk. If not, you are unable to find out limits. And now, just to add as well, I have heard a lot of companies saying, but what's the traditional or what's the standard limit? Now, yes, it might give you an idea, but it might be completely wrong, because every company is different. You have different operations, you have different geographical presence, different cyber maturity, different capabilities to recover, etc., etc. So we cannot base, for example, that, another company have both 100 million limits, I need the same. You might need 500 limits. So it is really important that whatever you decide as coverage is defined for your organization and not just a random average. It won't help you when something happens.
Yeah, if I can follow up on that, I think that that's such a critical point for organizations. All of us have biases based on our experience. And one of the ones that we all bring to risk is looking around to see examples of others who are in similar situations. And in the physical world, we look at things like geography, company size, industry, because these are the things that bring risk together, right? If I'm in one building and you're in the next building over and you have a fire, I could have a very real problem. In the cyber environment, everybody's connected. Everything is global. And traditional points of aggregation don't always work. I used to make this joke where I'd get asked questions a lot by clients. Hey, I'm based in Western Texas, and I'm a $35 million pharmaceutical manufacturer. Can you show me examples of organizations in West Texas of the same size and in the same industry who've been hacked? And the answer, of course, is no. But the point is that you have as much in common because you're using operational technology from one vendor as with an organization in Germany, an organization in Australia, an organization in India. You're all tied together by the same use of technology, or you might be on the same cloud provider. Those are just as strong as physical location and industry. Organizations really do need to take a ground up look at what's driving their cyber risk, because traditional back of the envelope measures don't work in the digital environment.
Very interesting. So Tom, but you said something, nice about the carriers being attuned to paying claims, and it's easy to work with some of these high value claims. Also, tell us some war stories, tell us some big claim examples, and also some learnings for our clients today who on the call.
Yeah, so I think, look, I don't think organizations necessarily appreciate the violence of cyber events. When we talk to companies, I think a lot of times cyber events get treated and managed as they would other more slow moving issues, maybe like securities litigation, right? Where you've got a lawsuit and then you have a time to respond and it goes on for a while and it's expensive, but you get to manage it. What happens with these cyber events is they're very quick. So we dealt with some enormous events a couple of years ago for some of the world's largest transportation and business data firms. And the one thing that was common in talking to both treasurers is that both treasurers said it was the first time in their careers they had had to do daily cash flow analysis. Now, these are large organizations with incredible resources, and daily cash flow analysis is usually something you do for an organization that's about to go bankrupt. But what they could not believe was how quickly revenue went down, bills stopped getting paid, and the expenses were streaming out the door. They actually had a cash crunch in the first 30 days. They were talking about drawing down their revolving credit facilities. It's remarkable to think that a multi-billion-dollar international organization could have a cyber event that could cause such an incredible cash crunch, but that's exactly what happened. I think the other thing that's remarkable for organizations is there isn't enough flexibility in the response plans. We were dealing with one organization that got caught up a couple of years ago, and the response plan calls for all this interpersonal coordination. One of the challenges, though, is that in a cyber event, you may not be able to use your email system. So they literally had to take employees and send them down to the local electronics store and have them buy phones off the shelf and basically recreate their infrastructure overnight, because all of a sudden they couldn't use their email. So I think that people don't necessarily appreciate the lack of control and the pace and the violence of these cyber events. They're very disruptive, very, very quickly. Last anecdote I'd give you is not necessarily an insurance event, but a personal experience. So I have a family member who used to own a little business in the middle of the country, and it basically did screen printing. So bumper stickers. Election years are big years for that business, right? Because they're doing bumpers and t-shirts and hats and the whole thing. And they got caught up with the ransomware event about this time last year. And he called me up. He said, we get hit with this ransomware attack. I said, oh, wow, that happens. What do they want? $5,000? Nope. They wanted $250,000 from this tiny little screen printing company. And that to me really drove home how everybody is potentially affected by this, right? If you think about that, this little tiny business printing stickers in the middle of the country gets completely shut down by a bunch of attackers who want $250,000 overnight. If that can happen to them, it can happen to any company. And so I think those are the kind of my key experiences that have driven a lot of what we've done in terms of advancing coverage and then trying to build out our claims and incident management capabilities for clients.
Thanks, Tom. Very interesting. So Magda, I think both you and Tom are mentioning about ransomware and phishing and how they're on the top of the charts. So any do's and don'ts for firms when it comes, or best practices for clients on these ransomware and phishing items?
I would start, Anup, with saying that malicious software doesn't install itself by itself most of the time. It's someone clicked on something or opened an attachment. So having that understanding and, admitting that is most of the time related to people or process failure is very important. Like the business email compromise as well is very popular. Phishing is very popular as well. But what happens in Asia is you receive an invoice, for example, from a vendor that you think is legitimate, and then the employee ends up paying a very big sum of money to a fake vendor because they changed the account number on the invoice. And this is not a sophisticated cyber attack. It's a weakness in people and process. People, because they didn't check, they didn't actually realize, they were not aware that that's happening. Process, because usually there should be a process about how to change a bank account of a vendor management as well. So there's a lot of aspects that are not looked at properly when it comes to cybersecurity. Again, I think there's still a very big focus on IT and believing that the IT manager will protect us, will put in place everything. Well, again, a malicious software doesn't install itself by itself. If you click on a link or you open an attachment, the IT manager didn't do anything. So the person is, at home working very nicely, and it's not their fault. Now, the other part that is very important here that we have the tendency to think as well is, but we have the IT controls or an antivirus or an anti-malware. There is no solution or no antivirus or anti-malware that has 100% detection rate. And we have more than 300,000 malware per day, new malware per day. So you make the math, they are unable to detect every single malicious software that might come to a company through email. So this is also something that people and organizations need to understand. But coming on the last point before I let Tom continuing is on the ransomware part, because I was expecting that Tom, your family member asks you, to decrypt the files, because this is something that happens very often. And when a client gets a ransomware, they call me and, oh, but you're a security professional, just decrypt the files. Well, it doesn't work like that. They use a very strong encryption, and there usually is a reason why they're using it. If the ransomware that has been, used is very old, perhaps there is a way around it. But if the ransomware is new and is used by a cyber criminal gang, forget about it. So either you have a backup and you are fine with the recovery time, or either you will end up paying the ransom, and no one in cybersecurity will be able to decrypt the files for you.
Wow, that this gets murkier and murkier. So Tom, my question to you is, like Magda said, if the ransomware has not installed by itself, malicious software has not installed by itself, there's a gullible employee somewhere, there's a lazy or a person somewhere who's clicked on some kind of a malicious link. What happens then to insurance claims? How do our clients manage some of these situations in process?
Yeah, that's a great question. So first of all, the policy is completely indifferent to the source of the attack. It doesn't matter whether it's an outsider or an employee. It doesn't honestly matter if the employee did it by accident or on purpose. The policy really is grounded in whether or not you suffered an event. Now, if the board of directors deliberately infects its own company, you got a problem, but then you got a whole different set of problems. So accidental events are exactly that, and they're perfectly fine. I would add that one of the things that I think we have to be careful about in cybersecurity is blaming employees for clicking links. Now, this is starting to veer into a little bit of a religious topic for me, religious in the cybersecurity sense. The reality is, if you think about it, organizations ask people to be incredibly productive, right? And to open all these emails. And then at the same time, they say, but don't open the bad ones. But no one can tell all of the good ones or the bad ones. It's like working in a factory, right? You're on an assembly line and there's boxes going by and your job is to open the boxes. But careful, because 1 out of every 10,000 boxes is gonna spray confetti in your face. Well, how can you get mad at the person when the confetti sprays? You told them they had to open all the boxes. I really think that organizations need to not blame the victim and recognize that at some point, bad things are going to happen. So user training, end user training, I think it's important. I said, but you cannot blame the tellers in the bank if the bank gets robbed. That's just not their fault. They're not in a position to stop that. One thing, maybe we could turn to one of the questions in the chat about silent cyber. Would it be okay for me to spend a few minutes on silent cyber?
Absolutely.
In fact, a really important topic. Yeah.
Yes.
So the question is, what is silent cyber and what are we doing about it? If you haven't heard, silent cyber is basically this insurance industry term for the exposure of cyber risk in traditional policies like property, like casualty, like D&O. And it's called silent because the carriers would have you believe that they haven't underwritten to that exposure, they haven't gotten the right policy wording for that exposure, and of course, they're going to tell you that they haven't charged for that exposure. And so it's been a really big topic because as cyber events have become more and more prevalent, there's been a lot more concern by the carriers about whether or not cyber is going to start to cause problems in property, casualty, and other lines. So the first thing to understand about silent cyber is that silent cyber is a problem for every line of business except cyber insurance. Cyber insurance, because it is designed for cyber, does not have a silent cyber problem. But your property and your casualty policy very much could have a cyber problem. The second thing about silent cyber is you have to separate, I think, the risks that the insurer is trying to deal with. Now, there's a lot of ways to break down cyber events, but when you talk about silent cyber, I think there's really three different categories of event. You have what we would now call traditional cyber events. Those are events that have something to do with cyber risk, but are not physical. Nothing was destroyed, nothing was physically blown up, nothing was physically injured. They're non-physical events. And for those, the best place to look for coverage is a cyber policy. You also have cyber physical events. Attackers got in and they caused the building to burn down. Or attackers got in and someone was injured, right? We just had a hospital in Germany where there was a cyber attack, and as a result, somebody didn't get treatment and they died, allegedly. That is a physical cyber event. It started with the internet, but it ended up having physical consequence. We would argue that the right place to at least start looking for that coverage is your traditional property and casualty policy. And this is really important because one of the challenges we're seeing is that when carriers are attempting to do something that's probably appropriate, or at least appropriate to discuss, which is say, hey, we have a cyber insurance policy, it deals with non-physical cyber, we're not going to pay for non-physical ransomware in our property policy. Now, a great deal depends on the history of your policy, what you paid, how it was written, if they were offering you that coverage. But in general, if they say we want to move that coverage from your property policy to a cyber policy, that's okay, or at least something that we can work through with, as your advisor. Where we have a real challenge is when they take these wordings and the policies aren't written very well, and as a result, they start knocking out physical cyber coverage in your property policy. Oh, if someone goes into a room and kicks a cord out of the wall and it causes an electrical fire, that's covered. And if they drop a lit cigarette, that's covered. But if they do it with a keyboard, oh no, we can't cover that. That's a big problem. And I think that's one of the big risks of silent cyber is that they're going to take the physical cyber coverage and they're going to remove it from property and casualty policies. That's something that in Marsh we've been very vigilant about, something that requires a lot of diligence. We really don't want that to happen, at least unless we understand it and can work through solutions. So that physical, non-physical is really key to understanding silent cyber. But overall, the number one most important thing, silent cyber is an issue for every single policy, but the cyber policy.
So that's an interesting point, Thomas. And in fact, there was a question from one of our clients I saw right now. The usual experience is that for property policies, for traditional policies, you can buy large limits, but for cyber, only very small finite limits are available. So one of our clients is asking the question, what are the maximum limits available?
Sure. So what I used to like to say to clients is that we typically run out of premium before we run out of limit. So there is a pretty large market. Organizations usually just don't want to pay for it. I will say that we have built and placed towers in the US of almost $1 billion. I think most recently right now, we're north of $700 million. But that really comes down to the client's appetite. I do think we're starting to see a little bit of challenge at the very high end of the market in that $600-700 million range. There's been a little bit of limit reduction, but it's certainly feasible for organizations to build a cyber insurance tower of $100 to $200 million without a lot of effort. Now, each local market might be different, and I realize there's lots of complexity in terms of looking to international markets when you're coming out of India, but in terms of the global market capacity, towers of a couple $100 million are totally feasible.
Fantastic. Thank you, Tom, for answering that question straight up. Magda, I have a question for you, which is there on the Q&A. There's a ransomware attack. the company pays the ransom, how much you can depend on the miscreants to give you your key, decryption key back after getting the ransom?
Yeah, I really like the question, Anup, because it actually asks basically, can we trust a cyber criminal? Well, first of all, let's understand that there are hackers who are good, and those are the ones who are trying to find weaknesses within the companies, and companies hire them. Now, the ones who are, attacking companies, those are the bad guys. And if they're the bad guys, how can you trust them? They're criminals. So you can't have 100% assurance that if you pay them something, they will actually release everything. I had a practical case or example where the cyber criminals just decrypted or gave the key for only one part of the files, not everything. So again, it's up to the criminal. They are criminals, so it really is a fact that you need to understand whenever you're dealing with them. You can't say that someone who has malicious intention will be honest and will give you back all the files because you paid a ransom. You never know.
Thank you. Thank you. Bhishma, my question to you is that while everything is hunky-dory, we can buy large limits, insurers usually pay up claims and all, not many insurers in India seem to have the expertise around this. And some of the claims which we have seen are pretty difficult. What are your top tips for our clients? How to manage difficult claims and difficult situations with carriers?
Yeah, great question, Anup. So first things first, the easy thing to do is choose the right carrier. I mean, that's the most important, aspect. You will find, every insurer coming up with an insurance product, but it's important to choose the right carrier, right intermediary, because they are the one who are going to pay your claim. So that's, first up. Second, it also starts with how much of underwriting that carrier has done. So it's important for the clients to give the right kind of underwriting information, fill up the application forms to the best of their knowledge, to give the right kind of information. Never make forward-looking statements. So just to give you an example, a couple of our clients who are in the process of getting some kind of certification, they will write, we are already certified. No, you are not supposed to give forward-looking submissions like that. State the right facts. Third is obviously have the right infrastructure in place before the policy is placed. Your partner ecosystem should be there inbuilt. Talk to your carrier, talk to your intermediary, get that incorporated in the policy itself, so that when there is a claim, when actually there is an issue, you're not running helter and skelter and figuring out with the insurer the partner to choose from. So that's important to know. And third, do the test run of the policy. Do these tests in frequent intervals. Find out if there is a claim tomorrow, who's the right person to reach out to. Keep all these things handy. These are some of the tips which we give our clients. Never ever appoint a third party without the consent of the insurer. I think 90% of our claims get into dispute when the policy obligations are not followed. This is a condition precedent in any claim, that you need to have a insurer prior written consent before you incur any cost. That's something which the clients should be aware of, and that's where it's important that you should know your policy in advance, the obligations in advance before you enter into the insurance contract. So these are some of the advices I would like to give our clients.
So Tom, before we wrap for the day, what's one piece of advice that you would like to leave for our clients today?
One piece of advice.
Just one.
I mean, I guess it would be buy more cyber insurance. I know it sounds right, but I feel very confident in that. Look, it's easy to say, but here's why. One, 10, 15 years ago, we were talking about organizations that didn't really have necessarily a lot of cybersecurity infrastructure. I think today, so many companies have robust cybersecurity infrastructure. So it's not about should you buy insurance or should you invest in security. It's really about you've invested a lot in security. Where are you going to spend your next dollar? And even though a lot of organizations already do have cyber insurance, as we've talked about, I've seen so many times in the past couple of years where organizations blew through their cyber insurance limits. It happens all the time. And so when you combine the fact that we see this risk, we see this growing risk, we see losses growing, and clients often don't have enough limit. When you add in the fact that economically it's so efficient, the amount of cyber insurance you can buy for $10,000 compared to $10,000 on cybersecurity, which gets you like half a firewall. It's just an incredibly efficient way to protect the firm. And so in terms of marginal utility, I really do think that buying cyber insurance or buying more cyber insurance, particularly when you get access to the services, is really just an incredibly effective way for firms to protect themselves.
Magda, what's one piece of advice from you?
Well, one piece of advice for me is, I would say it's not if, but when. So you must have and understand that, you must prepare, you must have an incident response plan and the support of a cyber insurance service, because as we see, the incidents are getting really, really increasingly popular and they might disrupt your business for at least 16 days in some cases on average. So be prepared.
Thank you. Bhishma, one piece of advice from you before we wrap.
Same, Manu. Preparedness is the key. As Magda has already said, 100% absolute security is an absolute myth. You will never be secured 100%. So you're bound to get affected either now or some other time. So preparedness is the key. And obviously, I second Tom Regan saying that buy more cyber insurance. I think that's important.
And make a good choice with your insurers and brokers.
Absolutely.
With that, it's a wrap. Thank you so much. You've been very, very interactive. Really appreciate it.
Thank you.
Thank you
so much.
everyone very much.
Thank you.